How's it going, everyone? I hope you're all having a great day. It's Wednesday, July 8th, so let's talk capital. All right, guys, so as promised, we're going to talk about the winners and losers of the past 6 months. So, as we discussed a couple of videos back, we just finished up the first half of the year, and now we're moving into the second half of the year, right? So, now we're going to talk about the winners and losers and what this is going to help for you. How this is going to help you is basically you're going to see which stocks you should be investing into going into the second half of the year and which stocks you should probably be avoiding going into the second half of the year, because not everyone's a winner just because the indexes are going up. We see the Nasdaq at 10,650. We see the stock market, I mean not the stock market, the S&P 500 at 3,165, and we see the Dow at 25,990. However, that doesn't mean that everything that trades under these indexes are doing good. That just means the majority of them are doing good, right? So you can either buy the indexes or you can buy the individual stocks. Okay, so now we're going to talk about which stocks you should really be investing in. So let's start with the winners. Okay, and right off the bat, as you guys can see, this is Amazon. Amazon is by far one of the top performing stocks in the past 6 months, without a doubt, and realistically in the past 10 years, this thing has just been on a tear, right? But this is my number one winner so far because, I mean, as you guys can see, this thing is fully gone vertical, right? So Amazon, and we're only going to look at 6 month charts because, again, we're talking about the past 6 months, right? So the current candle that we're in right here is for the next 6 months. This one right here is the one we're going to be discussing for the previous 6 months. As you guys can see, at the beginning of the first 3 months of the 6 months, this thing did pull down all the way down to 1630, which proved to be a fantastic buying opportunity, right? So had you gotten it at that point, you're basically up about $1,400 a share, right? And if we're going to talk percentage wise, you're looking at an 89% increase on your holdings if you got in at that point. Now, if you got in somewhere more logical like 1875, you're looking at 63%. However you calculate this, Amazon is by far one of the biggest winners, and that has a lot to do with the whole stay-at-home situation and the excess of money being pumped into the system and the checks people are getting, and Amazon having roughly a 50% hold of all online sales going on. They're going to be an explosive company, and they're proving it. Today, Jeff Bezos' net worth hit $180 billion, which is a modern day record. So Amazon is killing it. Okay, that's our number one winner. Our number two winner is going to be Tesla. Tesla by far, and guys, if you have been watching my videos, you know that I was bearish on this guy, and no BS, I was wrong. Simply put, I was wrong. And the reason why I was so bearish, if you guys have been watching the videos, you should know this. Back here when we hit 970, as you guys can see, Tesla was in a big range between basically $380 and $230. It was ranging in this area for about 3 years before we finally got a breakout. About 2.5 years, 3 years, until we finally got a breakout in December of 19. That breakout led us from $380 to $969, which I took a short on, because anytime something goes vertical like this, you definitely want to short it, right? That's just basically how this goes down. I took a short up here, and then we got out at about, no, not about, I took a short at $892 right here on this candle, $892, $95 exactly, somewhere in that $3 range, and I got out at where was the top here? $390 is where I got out. Okay, so I was able to ride that whole thing down, and the reason why I was so bearish on this, and obviously now looking back at it, I was blind to the fact that we did bounce off the 200-day moving average. That was a very bullish sign, especially followed by a higher low coming off the 200. Very bullish sign. Just being blind to it. These things happen. Sometimes you just get married to a situation and you become blind to what's going on. This happens to all of us, and that's the point. Number one point of trading is do not get married to these stocks. Okay, I was expecting a lower high to form somewhere in this area, and that would send us back down, but that never happened. Okay, and one of the reasons why it never happened is because Tesla was beating its estimated shares per price earnings, and another reason why is because we injected $8 trillion into the economy, basically inflating everything, so everything's playing catch up. Regardless, Tesla has been a monster of a trade, guys. Monster. If we take it from that 200 moving average until the top here, you're looking at a 283% move just in the last 6 months, if I am not wrong. Let's look at this candle right here real quick. Just in the past 6 months, it moved up 205%. So we were counting this whole move. Realistically, we're looking at this candle right here, right? So about a 200% increase on your money. That's substantial. Okay. Third place, and this one's going to shock everyone, but man, you guys are not ready for this chart. Here's PayPal. PayPal, wow, what a winner this guy has been, right? So this is the 6 month candle we're looking at, and this is a complete surprise to me. I did not expect PayPal to do this, and to be honest, completely missed it. Wasn't even paying attention to it. And again, these things happen, right? But again, if you were to get in somewhere around 80 bucks, let's just be rational and say you got in at $89 and got in at the top, you're looking at basically 100% increase on your position, right? So you doubled your position. These three have been killers in the market, literally killers, guys. I expect them to continue higher in the long term. Short term, they probably are due for minor correction. Nothing major, minor correction. So anytime you see these things down, so let's say if we go down about 20-30% here, you should definitely be looking to buy these things on a long-term scale, right? Fourth place, we got Netflix. Where's Netflix? Netflix right here. 6 month chart. Again, this one, the returns aren't as massive as the other ones. 64%, I mean, definitely not bad, but nothing compared to the other two, right? We're talking 100%, other three, 100%, 200%, and all that, right? So 64% still incredible. However, not as good as the other ones. But major thing here is this 6 month candle broke this top, which was resistance. So basically right now $394 is major support for Netflix. So if we somehow pull back down to that $390 to $420 range, you should definitely be looking to buy this guy. This thing will explode higher, probably looking at end of the year somewhere around the $700 for this guy. So it's definitely had a successful past 6 months, and it's most likely going to have a successful next 6 months, right? That's third. Fourth, Netflix is fourth. Microsoft is fifth here. And Microsoft, like Amazon, has been an absolute rip since the 2009-2008 recession. Just an incredible rise in price, fucking 780%. That's not a joke, you know, excuse my language, but that's not a joke. 780% in 10 years. That's incredible, you know, that's cryptocurrency numbers. That's beautiful. You know, Amazon and Microsoft have definitely been on a rip. And the past 6 months was just another example of that. We pulled all the way down to $132 and it closed the 6 month candle at $203, which by in itself is a 52% move. So again, not as big as the past four, but again, 50% is 50% up in 6 months is incredible, guys. You're beating out hedge funds, trust funds, and the market, everything. You're beating out everything, right? That's what I want you guys to understand. So Microsoft killing the market too. And last one for the winners here is Nvidia. Nvidia looks a lot like Netflix, right? Yes. So Nvidia looks a lot like Netflix, and again, took out the top and just continued onwards. This 6 month candle would have given you a return of 110%. So very nice. Basically, what you're looking at Nvidia here is, and Nvidia has a lot of good partnerships, guys. They're partnered with Mercedes and a couple other car companies making those insane dash units you see where everything is basically a laptop. That's all Nvidia technology in the car. Okay, so basically your support areas where you should be looking to buy Nvidia is $236 and $290. So that $60 range, basically right here, is where you should be looking to buy Nvidia. Okay, so $237 to $293 is where you're looking to buy Nvidia. If we get back into that zone, it's a definite buy. As of right now, you don't want to FOMO in and have a chance of this pulling down. You getting scared and saying, "Oh, I got to get out. It's going back down." Just relax, wait. We already missed these trades, right? So we got to wait for it to give us an entry for us to get back in. Okay, that's all for the winners. Let's go to the losers, and some of these are going to surprise you guys. So we're going to start first with Disney. Okay, and I want you guys to understand a trend here. The past 6 charts we looked at we're all breaking an all-time high and setting a new all-time high, right? Basically, you're just seeing nothing but blue candles going up. Okay, in the next set, the losers you're gonna see, you're gonna notice that they're not doing that and they're trending downwards. Okay, so starting off with Disney. Disney is surprisingly underperforming. It doesn't make sense to me, but I mean, sometimes these things just don't make sense and we just have to go with it, right? And the reason why it doesn't make sense to me is because the release of Disney Plus to me should have boosted this, but maybe people not only didn't enjoy the content, but it's a lot of old school content on there. So it's a lot of stuff we've seen before as kids multiple times probably. And basically, what that comes down to is there's only so many times you can watch something, right? So when The Mandalorian came out, they were doing good because there's a lot of viewership, a lot of constant people coming on, traffic into their system. So the stock was doing good, but since then has not been doing good because again they don't have new releases like Netflix and these other guys to bring the viewership back. So Disney is not looking good. I'm personally not looking to touch this until we break out here. Until then, just watching it. Okay. Second on the losers list is IBM. IBM has just been in a downtrend for wow, for 8 years now. Okay, so we've been in a downtrend on IBM for 8 years. Now it's been a loser for the past 6 months. Now the positive thing here is this: if in the next 6 months we can hold this low of $111, then we're looking to move up. And why do I say that? Is because we're in this support zone right here. So basically your support zone here is this. This is your support zone. And as you guys can tell, we're in that support zone. Okay, so previous all-time high, major resistance here and a fat breakout going up to almost 100% gain up to $216. Now we have the retracement back down to the previous all-time high, and if this holds, then it will look to move higher. Okay, however, if it breaks, we will look to move lower. This is why I'm not touching this until the next 6-month candle closes, so we can see what direction we want to head in. Okay, next on the list, again a surprise to me even, is Intel. So Intel put down a very big high wave doji candle here, especially major resistance point, right? So we came up to all the way up to $69.25 and rejected that heroically in the past 6 months, pushed down, and basically, not basically, definitely closed at $60, and we closed as resistance. So this is not a good pattern to be buying in on. You want to wait for either a retracement or a break, honestly, of this. If a candle closes above this $69 level on the next 6 months, then I'm going to get more bullish on Intel. But until then, I'm definitely not bullish. This is a possible 6-month double top M formation, you know, M, and then we come back down. And that's not going to be good, even though I don't expect it to come down all the way down here to $15. You still don't want to be buying up here and have a chance of this coming all the way down to like $36. And you just sitting in this trade for 6 months to even maybe a year until it rebounds and pushes back up or higher, right? So Intel, another loser. And here's another surprising one: Berkshire Hathaway, guys. This is Warren Buffett's company. Okay, this is a very big surprise to me, but I'm going to show you why they're down so big after we finish the list here. So this is a bearish engulfing candle of the past 6-month candles. So this is a bearish. We undid 2 years of data in one 6-month candle. Okay, that's major. That is major. Basically, resistance right now for this guy sits at $190 to $200. Okay, so even a push up to that level is still bearish on this, and probably looking for a move back down to like $150 or even $100 here, right? And the reason why this is so bearish is for one reason here. A lot, and I mean major holdings of Berkshire Hathaway are in Coca-Cola. And if we look at Coca-Cola, well, it did the same thing as Berkshire Hathaway. One 6-month candle undid 18 months of data. Okay, so this, again, Coca-Cola is very bearish, along with Berkshire Hathaway. Now, one saving grace is, before I tell you the saving grace, Warren Buffett owns $18 billion worth of Coca-Cola. So a lot of his money is in Coca-Cola. And you guys can tell every time he drinks a Coke, he advertises the can. Like no one drinks Coke like that, right? He drinks Coke in a way where you can see the logo. Anytime a picture's taken, that's advertising. The guy's a genius. Okay, and so one positive thing Coke has going for itself is this. This 6-month candle was a very violent retest of the previous all-time high at 43 bucks. And the positive thing for it is the body of the candle closed above even the wick here, which is more bullish than bearish, specifically because we held the 50 moving average too, technically, right? Now, that does not mean you can't push down, but basically what this is saying is this area between $44 and $36 is a major buying area for people. So we're going to have to wait the next 6 months to see how this holds and how that helps Berkshire Hathaway. Another big loser here is Boeing. Boeing just completely collapsed here. And basically we had one 6-month candle here undo basically 18 months to 24 months worth of data here, and it did not even close above the moving average here at $260 and has had a lot of trouble pushing back up, right? Positive thing is it did bounce off the 50 moving average, but if we look the last time it did this, it wasn't like some crazy bounce up, right? It took 1, 2, 3, 4. It took almost 3 years here before we came and took this out. So this has time to play out. We got to see how the next 6 months close on Boeing to see how we're going to play it. And one major thing to understand is this, guys. Boeing is very dependent on commercial international travel. Okay, and international travel is probably going to be severely restricted in the next 6 months, even the next 24 months. You're not going to see a lot of traveling going on between countries because of the whole COVID situation. So this is going to be important to watch for that. And another major loser here is Ford. Ford broke a 6-month bottom here, coming off a piercing pattern. This is a very bearish candle. This previous 6-month candle that closed. This is very bearish, guys. This is very bearish. Now, one saving grace for this is a possible inverse head and shoulders pattern going on with the left shoulder here, head, and a right shoulder going on here, and the neckline sitting at about 16 bucks. But man, this is not looking good, you know. And if we go ahead and drop a trend line here, you guys are going to see how this thing has just been respecting that and just constantly pushing down, pushing down, pushing down. So even if it pushes up, we have major resistance at about $8.50. So very bearish on Ford, not looking good at all. GM looking even worse. So positive thing to say about GM is it did close above this this massive high wave doji candle. It did close the body above barely, but it did barely close it above the wick, so that's good. But as you guys can see, basically a new low was set here from 2000. So we set a lower low here than we did in the financial disaster of 2008 and 2009. That is definitely not a good sign. Okay, and real quick, to go through a couple real quick here. So that's basically does it for the losers. And as far as the winners go, I don't have any honorable mentions. You guys already got all the ones you need to get. For losers, I do have some honorable mentions, or dishonorable mentions, if you want to call it that. McDonald's, it's neutral, but it's leaning more bearish than it is bullish. Okay, 3M definitely bearish. This thing should have been outperforming a lot of companies because of the whole PPE situation. They make a lot of these masks and face coverings and everything, so it doesn't make sense why they're pushing down. So I'm bearish on that. And a major bearish scenarios unfolding in the financial sector with the banks. The banks look terrible, guys. JP Morgan undid 30 months of data. That is just incredible. Resistance sits at $100 right now for JP Morgan, and they're not looking good. This thing is looking like it wants to come down and test the all-time high, the previous all-time high at 57 bucks. Okay, so JP Morgan not looking good. Bank of America not looking good. Bank of America setting a lower high here and doing a bearish engulf pattern and doing a possible head and shoulders here on a 6-month. Left shoulder, right shoulder. Left shoulder, head, right shoulder. This is a very bearish pattern coming off a lower high too. So we have a high and now we have a lower high. This is very bad. Bank of America is not looking good at all moving forward. And that is all represented in the S&P 500 financial sector, with the financial sector doing a bearish engulf and undoing 1, 2, 3, 4, 5, 6 months, 6 month candles of data. That's 36 months of data. That's 3 years of data that this thing undid, okay, in one 6 month candle. So definitely not looking good in the financial sector. There's definitely a problem in the financial sector that needs to be resolved, and I don't know when that's going to be resolved. So we basically don't want to be touching anything in the financial sector. It's not looking healthy, so therefore we don't touch it. We want to make sure we focus our attention on the winners in the next 6 months. We want to buy those on any kind of retracement coming down 20 to 25%. You definitely want to buy those. Okay, now that we went through that, before I jump into our broad market analysis, I want to ask you guys, please, if you like the content, leave a like. Definitely hit that subscribe button so you can stay up to date with the content. Tick that notification bell too so you can get a notification anytime I do post. But it definitely helps. Definitely leave a comment too. I love hearing what you guys have to say about the videos. I love hearing you guys' opinions. So leave a comment. Let me know what you guys think. And with that said, let's go ahead and look at the broad market. So last night, S&P 500 was pushing down, looking like it did want to break out of this it did look like it wanted to break out of this ascending channel that we're in. But as we sit today, daily candle closed nicely. We are looking like we want to push back up to this 3218 resistance. So we're going to see how that unfolds. But the major thing I want to focus on here is this, guys, gold. So as we talked about in the last video, we were looking at gold and we were saying basically two scenarios can unfold here. We can hit the top of this wedge and reject it and move back down to the middle range or even the bottom range here. Or what I said, the most likely scenario is we get a breakout, and then what's going to happen is we're going to have to buy the retest of the wedge, right? Now this retest might come after we hit 1828, okay? Or it might come in the next 2 days and we hit it and then we bounce back up. So basically this could either go up here and come down and then come back up, or this could come down and then go back up. So either way, we're looking at a retest of this area, which as of right now would sit at between 1792 and 1797. So if you see gold going into 1797 or 1792 area, you definitely want to buy it. It will bounce back and will go to 1828. Okay, and to end the show here, we're going to go to Bitcoin. Bitcoin is looking very nice, holding this uptrend that we have been in. Holding the uptrend that we have been in since the bottom of 3200, and we broke it, and this turned out to be a false break as of right now. This has been a false break, right? So because we held it here, we held it here, we held it here, and then we broke out but immediately came back into it, and then we held it here, we held it here, we held it here, and have been holding it continuously here for days, weeks. Honestly, we've been holding this for weeks, guys. All of these spinning top candles and dojis you see here are all just a sign of indecision, as in Bitcoin is getting ready to make a major move, and I firmly believe this major move is to the top side. Okay, full disclosure, I am back into my position. I did get back in at 9100 over the weekend on Monday, and basically we're just looking to ride this thing to 20k and beyond, guys. This thing it's primed. Bitcoin's primed. Do not get it twisted. Bitcoin is primed. It's ready for a major move, and it is going to shock the world in the next 2 years. So keep your eye on that. And as always, thank you guys for watching. I appreciate the love, and I'll see you in the next video.